as long as you're asking the question, what asset is going to get me to my goals, you are asking the wrong questions and you will never be able to find it.
Welcome to Wealth Up with Donny Mango. Today I'm exceptionally excited because one of my very own mentors, the one and only George Antone, author of Banker's Code, Wealthy Code, Debt Millionaire, and others, and the brainchild behind Fynanc Academy, Fynanc, Fynanc, which is an education platform that is really changing lives. And I don't say that lightly. Today is a discussion between George and I, talking about this program, talking about his upbringing, talking about wealth, and ultimately trying to show you how you too can get wealth done. Let's get into it with my guy, George. Let's go. Ladies and gentlemen, I present to you Mr. George Antone. Hi, George. I am very well. Thank you very much. What is a word higher than like a honor or pleasure?
It's my honor.
Whatever that word is, that's what I am right now. I'm honored and grateful that you're here to share some of the old Antone wisdom with the Wealth Up audience. So George, again,
thank you for having me. Really appreciate it.
George, I tell everybody that I know George Antone, and nobody believes me. So look, for the record, can you confirm or deny that we are?
Yeah, we are. And honestly, it's a pleasure to have you. And we've interacted so many times, and it's always a pleasure talking to you.
Likewise. So George is one of the most humble guys that I know. Obviously the most honest guys that I know. He's been my mentor for a couple of years, and actually probably even before that, George, because I had your books, and your books, though not directly speaking to me, you were speaking to me through those pages. So George, the Wealthy Code, the Banker's Code, Debt Millionaire, these are the books that really shaped how I see and interact with wealth. Your approach to this, it's not always about just increasing the numbers on a spreadsheet. It's about what that does for you. Like, what kind of life are you living? What are you leaving behind? What are you doing with the limited time we have on Earth and making the most of it? And that's what wealth sort of buys you,
100%,
right?
100%.
All right. So I want to learn all about George, and I think the audience really wants to learn about George as well, because there's not a lot of platforms where George is on to share some personal stuff. But George, I'd love to know origin story. I know a little bit, but to be quite honest with you, I'm not entirely sure about the beginnings and all that. So can I ask you a few questions about your relationship, and we'll bring it up with money as well. I'm not going to make this about very, very personal, but just your relationships with money.
100%. Let's go.
So growing up, I know your father had an influence, and I don't want to influence your answer here, but what is your first true memory of dealing with wealth, dealing with money, not going to the corner store and buying something, but memorable experience for you?
So when I was 15, my dad asked me to help him run. He owned quite a few businesses after school. So I'd be done with school, come back from school, do my homework, and then head over to the office and help him out. And he owned, like I said, quite a few businesses. And so I loved working with him. And that whole experience working with my dad was really, as you know, with every kid, they're looking up to their parents. So it was amazing. And then when I turned roughly 18, I was 18 and a half or so, my dad unexpectedly passed away. And so suddenly we have all these businesses and we had all these employees. And here I am with my younger brothers. My brothers were 15, 17, and I was 18. And my mom, we had to run overnight, like sort of take over and run these businesses. And my dad had trained me all these years. And what happened is I went from one day thinking about girls, to overnight thinking about, I have to make sure all the employees keep their jobs and sustain all these businesses. And overnight, I went from being a kid to being essentially a man. And that to me was was unfortunate. The whole event was unfortunate, obviously, but it made me realize how important I had to step up and overnight grow up, right? And I started realizing that. So I lost. This is gonna sound weird, but I lost the interest in money. I gained the interest in lifestyle, right? What can money do for you, right? And so that was my first experience with seeing wealth, seeing everything we built with my dad and I, and how amazing it was to work with him, and really about helping create jobs, all that stuff. And overnight, like this, I was like no interest in money, but I was interested in building wealth for the lifestyle. So that was the first experience I could, that shaped me.
Yeah, and I knew part of that story. I didn't know
Yeah.
all of that. So, and that's hard to go from
Yeah,
being a kid, really talking about doing things like with cars or with the boys at the bars, and then you go from that to being a man
exactly.
instantly.
Overnight.
Yeah, and it doesn't sound like a lot of people when I ask them about their first job or whatever, it's usually ego driven stuff. Like I want it to be fresh. I want it to
Yeah,
look cool with the latest gear and all that. And that's not the story you just shared. It what has nothing to do with
exactly.
ego. It has everything to do with you're helping
Yeah.
people stay afloat, whoever worked for you and your family. Yeah. So I'm sorry you went through that, and I know that it's shaped who you've become. So it's like there is light from what you from darkness that you were in. So thank you for that, buddy. But none of what you just described was conventional.
Yeah.
And a lot of what I talk about is like just stop following conventional
Yeah.
herd mentality. It's not always accurate. Just because everyone's doing it doesn't mean it's the right thing to do. I mean, you can look at a pile of poop with flies all over it. They're not right either, kind of thing. So, um, that your path wasn't conventional, and I know that what you do now. We'll get into that. Your delivery of what you're talking about now is far from conventional. When did you realize conventional wasn't for you?
So in late 1990s, I was working at a company called Intuit, which are the makers of QuickBooks, Quicken Financial Planner, TurboTax, a lot of financial products, and I worked on some of their products as a developer. And so one day I was looking through the source code for one of the products, and right there I saw an equation, a formula, because everything obviously has to be based on facts and formulas in the software. And I discovered a formula that really proved mathematically that the financial system, the way it is set up, will automatically have people that will struggle all their lives, and most of them will never be able to reach their financial goals, versus the very few that will. Now, it was always something we felt, we always heard about it, but we never really could point our fingers exactly why. And on that day, when I saw the source code, I realized it truly is the case. But also, it tells you that on the other side, it is a predictable way to move over to the other side, meaning to make the system work for you. And what I realized then that day is this is a huge problem. I didn't have a solution for it at the time. And I struggled with it for a number of years, like knowing that this is based on math and you don't have a solution. And so here you were like facing this, knowing that very few people in the world understand this is the problem. And that's what really shaped everything. Because after many years, when I discovered sort of the how to crack the code, I realized it is actually very.
That's okay.
Sorry about that. I forget to turn this off.
Crack the code.
So I'm going to repeat this.
Sure.
So I realized that, yes, it is a mathematical equation that proves most people will never be able to escape their jobs, essentially. And they're very dependent on the system and a job. But I also discovered the other side, which is it can be predictable to get out of the rat race, essentially, and very quickly if you understand the formula and how to crack the code. And that was the thing that changed everything for me. But it took me a number of years to figure that out. And so, yeah, so that really shaped me as well.
that what you just described, you're talking about the
Correct.
break-even formula, correct? Okay. So, and I know this because I'm connected to George, and you had this talk before. George, I will say this. The first time I heard you talk about the break-even formula and a story similar to this, I was like, okay, I get the point. And then it haunted me. It haunted me. It still haunts me that to know that it exists. I use that example of what you just described and what you discovered in that software to show people this, what you're trying to show us, what you showed me. The power of what you delivered, it wasn't felt immediately, but the profoundness of what you discovered and what you shared with me. I don't know if you meant to do it this way, but I'm telling you, 2 years later, it still bothers me, and I could see why you left your job. I could see why you said, no, I can't live I can't do this anymore, because this is like, we are, it's predetermined that you're going to fail. And the break-even formula, I won't get into it too much today, but it involves looking at inflation. It involves looking at your tax rates. And then when you do that, you'll realize you're not going to win. You don't have a chance.
It also says,
yeah,
clearly shows you, as you're right, Donny, as you dig deeper into the deeper layers of what this means, you're going to get to a point you're going to realize that there's truly two games. There's the wrong game that we've been fed the rules to play, and the rules don't make you win. Those are the rules to keep you where you are, versus the other game where the rules are much easier, okay, to win, because you understand the rules. There are different sets of rules. So what I tell people is that
right.
you might see it. When you see that equation, it seems like just a simple equation. But as you dig deeper, just like what you're saying, people 2 years, 3 years to actually get it. And here's what I tell people. If you're obsessed with getting a higher return, for example, which is what most people are, you're playing the wrong game.
Right.
You are playing the wrong game. And you're going to keep obsessing over that rate, higher return. And you don't realize you are so ingrained in the wrong game that you cannot see anything else. And that's the problem, Donny. Just like you're saying, it takes people several years because all they see is just one simple formula. But it's a lot deeper than that.
Right. Yeah, there's a lot to unpack from that. Like, what happens because of that? And what happens
Exactly.
because of that? And you just keep going and you keep going, and it's like, hang on a second. This entire thing, whether by design, I don't know. I'm not a conspiracy theorist, but whether by design or not, it is absolutely mathematically proven that the system works in such a way that you're getting poorer. You just haven't realized it yet when you follow conventional advice. So that was profound. I've shared with you before, I think, but I wanted to be on the record now and let you know the way that you felt when you discovered it. You've put that onto me, and I've had to feel, and it's a terrible feeling, but at least it causes you to change what you're doing, and so it did. So thank you for that. Okay, let's talk about George more like today. So George's company called Fynanc, Fynanc, Finance. You're an education company and coaching company that really shines a light on certain wealth components, wealth strategies, wealth aspects. And it's very different than what you see on CNBC and all that kind of stuff. Now, I think we live in a system where all the noise around is actually designed to keep doing this, because there's a lot of fees generated from everything, transactions in and out of ETFs, stocks, brokerages, advisors, apps, you name it, taxes that come along with it. All that kind of stuff happens because we are hungry for more and more of that kind of financial action. And that's not what you do at all. That's not what you do at all. You've taught and influenced a lot of us. So I am one of George's mentees. What's the one concept that you think most people get wrong about building wealth? Let's start there.
So it goes back to that whole game idea. So here's what I would say is, so I'm going to describe two different games here, or two approaches to building wealth. One of them is the asset first approach, and the other one is the finance first approach. So let me tell you what asset first approach means. And then I'm going to use a question that most people ask themselves, and that leads them down the wrong path. So when you say, what asset should I invest in? Let's just say you've got $10,000. You're like, what asset should I invest in? That question leads you in the wrong approach. And the wrong approach is the asset first approach, which is this idea, this belief that there's some asset, secret asset that's going to make you wealthy. It doesn't exist. Okay. So when you ask yourself, what's the asset? What should I invest my money in? Immediately you're thinking an asset, but that, like I said, is the wrong game. What you should instead asking is a different question to lead you into the finance first approach. And let me explain the finance first approach. The finance first approach is when you match the right financing with the right asset. That combination in the right sequence matters a lot. So what you should really be asking is, how can I increase my capital as opposed to what should I invest in? How should I be increasing my capital? What asset can I buy that I can match with the right financing? You should start with the financing. Here's the financing I want. What asset would match correctly in the right sequence to increase my capital? That's the problem. So here's what it boils down to is, if you think about rate, I'm going to invest in a stock that gives me a certain return. We have no control over return. We are speculating. We're going to put our money into something and hope it goes up by that return. The challenge, though, is we have no control over that. But when you are focused on the capital, you have a little bit more control. You never have full control, but you have more control over the capital side than the rate side. And so this is the first concept: is stop seeking some kind of secret asset that's going to make you rich, and think about all the people on YouTube and all these shows. All they're doing is selling you something that is out of your control, which is the return. What you should be instead thinking about is, ask yourself, how can I increase the capital I have? That starts getting you into a different mindset. And this is where a new set of strategies come into life, that you can now increase your capital before you invest it. So what I tell people is, grow your capital first before you invest it. Grow your capital first before you invest it. And they have no clue what that means. Well, there's a huge step about growing capital before you invest it that they miss. Most people miss. So what they do, they start investing directly, and that's the problem.
They think it's the same thing. They think that growing your capital
That's
means
exactly
investing
correct.
in it. Right.
And they're very
Yeah.
different,
It's the language.
different set of strategies.
Very totally. I'm biased here, right? Because I completely agree with you, obviously, and I understand what you mean by grow the capital, and it has nothing to do with put your money in the highest ROI ETF at the moment or whatever. You take a stab at that. It's got nothing to do with that. That's not what you mean here. You use these things that you commonly refer to as levers, and one of those levers is velocity of money, for example. Like you're figuring out ways, what can you do with your money such that you can grow it faster? And it's not tied to a return rate. You could make one up if you needed to, but that's not what we're talking about here. We're talking about, how do I use my money to make more money so I can build up more capital? And eventually, when I have the higher capital, then I can invest that will start bringing in passive income or whatever it is that you desire.
Correct.
Yeah. It might be obscure if you're listening to this on the audio in your car. You have my word, you have Donny Mangles' word that what he's talking about will make complete sense if you start exploring what George's company does, Fynanc Academy. It is marvelous, and thank you for sharing that wisdom. So I do believe that is the wrong approach. Asset first. Man, I can't tell you how many times I've sat, like my background in real estate, how many times I've got 200 grand. What should I buy, Donny? And you're talking about asset. You've not considered the mortgage part of it. You haven't cared about. All you're saying is, if you find me any good deals, let me know.
Yeah.
That is entirely asset first. And first of all, you're never going to win because there's always a better asset in your mind. Yeah. So it's just a flawed strategy. And we are on a mission to tell others to change the world so that they can stop thinking this way, because there's better ways of
Exactly
doing it,
correct.
I believe. So going from asset first to finance first is a big thing. And I know that you spent a lot of time in real estate back in the day and in business. Like you were an employee, then you started doing a lot of investing. You practiced what you discovered. You created wealth this way. You built it up, and now you're helping others. I mean, more or less follow in your footsteps.
Right,
Would you agree?
100%.
Good. Okay. And what I want to know was, because I've seen the last call it year, your approach has changed a bit. I would say fundamentally nothing's changed. Like at the foundation level, and when for everybody who signs up for George's program after listening to this brilliant man speak at Fynanc Academy, I'm talking about this thing called, well, it used to be called income amplifier. So George has a fundamental program that he offloads his knowledge into this program, and this program is really designed to build your capital. That's what it does. But now I see there's 4 or 5 layers that you've put on top of this, which amplify results, give you more predictable results as well. Can you share a little bit more, high level, of course, about how finance, FYNANC, has evolved over the last 6 months, 12
Well,
months?
it never actually changed. What happens is we simply help people start. We want to help them build the base. And so what you're referring to is a capital amplifier. The capital amplifier is essentially, let's go back to what I was saying earlier, the finance first approach. The finance first approach is the idea of focus on growing your capital first. So that's where the capital amplifier comes in, is focus on that. Because again, there are 2 sides to every single deal. You've got the capital side, and then you've got the rate. We cannot control the rate, but we have more control, I should say, over the capital side. So the capital amplifier is meant to increase the capital side, the part that you have more control over. For example, let's just say you're buying a property, a rental property. If I told you you're going to generate X% return, there's no way to control that. But here's what you can control. Again, you have more control. It's all relative. If you say, I'm going to get a 70% LTV versus 80% LTV loan, you have control over that. You can choose how much LTV. You can choose how much the property is worth, right? 400,000, 300,000, 500,000. You can choose whether it's 15-year versus 30-year. You can choose if you like the interest rate upfront or not. You say, you know what, this is too high.
Right.
I'm not going to go forward with it. Or I like this interest rate and the rent is going to cover that. So there's a lot of choices you can make upfront and make a decision if you're going to move forward. But guess what? You have no control over the appreciation rate. You hope it's X%, whatever X% is. Same thing with all your investments. You want to be able to control the capital side. In this example, I gave the mortgage side, essentially. Now, I'm not talking about just real estate here. I'm talking about all investments. You have to ask yourself, how can I control increasing that capital? And so what has changed, really what has improved, is really adding more layers. That's called capital stack. We're increasing your capital stack so that there are different options to increase that capital side versus the rate, if that makes sense. Does that make sense?
Well, I get it because I understand the language you're speaking, and I hope the audience doesn't. But if they don't, you can email George directly. Here, George's cell number is... No, we won't do that. No, I get it, but I think for those that are first hearing about who this lovely fella is on this podcast, you are now going to go to Google and you're going to look up George Antone and get his books and understand the philosophy. It'll change your mind about money and wealth and all that, and just the way the system works. And then when it does, you're going to realize you need more help. You need to understand. You need to get more immersed in this culture, in this space. Not for George, but for you, because he will change your life. His staff's amazing. His team's amazing. They've done amazing things for Catherine and I and my girls, and they'll do the same thing for you. It's very nuanced. It's very specific, but very practical and easy to manage system. It's a great intro to money. George, you should put a kids program together, like 10 to 12-year-old kids program before bad habits start. nip it in the bud is what you're asking.
You know, Donnie, let me
All
say
right. Well,
this.
yeah, what do
Let
you?
me say this.
Yeah.
The part of the thing that I explain to people is the reason this seems different is the following. So the fish doesn't know it's in water until it's taken out of the water. And that's when they realize there's a different world. There's a different world that has always existed, but they never saw it. What I tell people is it's time for you to see the different world, the world that bankers and financial institutions have been playing in. And so it's time to get out of the water and see this other world and discover the problems with the existing world that you live in. This world that you live in is there by design. And so just recognize that there is a different world. That's the first step, is there's a hidden world that you are not aware of that simply has been there the whole time. And it's just time to open your eyes to it. And the minute you start understanding how banks, how financial institutions, how the very wealthy play, it is very different than what the world you're living in. And I'll just tell you a secret. This other world cannot exist without the world people live in. Right. And so
Yeah.
that's why
Yeah.
some of this stuff sounds different. It's because they're so ingrained in this world, in the world that they're in.
Totally. It's a parasite and host kind of relationship, and they need each other. And that's why it's in the people with power and control best interest to continue this relationship the way
100%.
it is. And there are other ways. So you got my book, George. I'm heavily into creating a money mansion, is what I call it. And it's really, there's solutions that are using insurance as a tool for wealth accumulation, and for the same reasons that we agree on, and certainty of outcomes, things like that, where you're not really hoping for things to happen and go your way. It ties in perfectly well with what finance does. To me, it just gives, it's so comforting knowing that great minds think alike, and that there is no one's pulling the rug over anyone's eyes, and no one's competing for what is happening. This system that we understand, how we understand differently, there's levels to it, there's layers to it, and there are things that are complementary. And I think what you do is very complementary to what I do. And I love the fact that someone like me and someone like you can get together and have these discussions and hope to change the path of other people, listening or catching us on YouTube or things like that. There's a lot of information out there that's just not getting through because it's not as sexy, it's not as pretty, it's difficult to understand. And those who have the billions and billions of dollars don't want the message getting out. They stand a lot to lose a lot of money and a lot of control. So we're trying, George and I are trying to get to, like, telling people, no, you have to follow their rules. You can understand them, pivot, and change your own path.
Yeah, let me add something to that, Donnie, because I want to make sure people understand the following: that the problem isn't a product. The problem is a process. They are in the wrong game. So you can literally do the process with many different products, but it really works. People need to understand the process. That's the key. So you cannot invest yourself out of the capital problem. I'm going to say that again. You can invest yourself out of a capital problem. The problem is you don't have enough capital. And so here's what I tell people. I say, imagine you have $10,000 and you've got 3 products you can invest in: income producing asset, growth asset, and an asset that does both things, income and growth. And where would you invest it? And so people spend all their times in our workshops thinking, is it this or is it this or is it this? But what happened is I immediately tell them, it doesn't matter what the asset is. The problem is you don't have enough money. $10,000 is the problem, because no matter where you put the 10,000, it doesn't make a dent, right? The thing is, you have to increase your 10,000 to say 200,000, 300,000, $1 million before you invest it in those 3 products. So that's the underlying problem, is they are thinking which of those 3 products. And that's why I say it's not a product issue. It is a process that gets you to increase your capital. And what you're referring to, Donnie, in your case, the life insurance, increase their capital because they have more control. And I say that again, more control over how you increase capital versus what the rate is on these things. So that's why it's so difficult for most people to think, what is the product? Because they keep thinking about the product, but they're not realizing the problem. You don't have enough capital, period. For how you increase your capital is the process. And so most people are looking for like an ETF or a property, or no matter what the product is, that is not the asset. The process is the asset. That's what they're not getting it. It's the process that gets you that's the asset that gets you to the bigger capital. Then you invest it.
It's strategy. It's all based on it's strategy is the underlying principle here. If you chase the asset, you just first of all, what you taught me before about sequence. You talked to me about even when you're acquiring assets. If you go for the property first, that thing is illiquid. Okay, now you've trapped a lot of your capital in this thing that is, you have no control over the growth of it. It's going to happen or it's not going to happen. You have no control over what happens next. And then in the meanwhile, time's going to pass and you've lost access to try and grow that money. And it was all because sequence was wrong. You put your money into an investment asset before you grew that money. And yeah, so that's had a profound impact on me as well. And you know, if I could go back 20 years, would I follow this other approach first, where I'm growing the capital with my capital and then acquire? 100% I would. But hindsight's 2020. I'm fine. Thank you for asking. But that is the right way to do it. Sequence is, which is come down to strategy again. Sequence matters. You can't just go in there and say, I've got 50 grand, I got 100 grand. What can I buy? You're missing the point.
That's exactly correct.
Yeah. All right. So George, I'm going to talk about the future for a second. What do you see? What opportunities do you see in the future? Possibly through AI stuff, possibly through, I don't know, policy, anything that you can see on the horizon that you're excited about or you think could have an impact?
So, one of the things that, as you know, with our company, we're not just developing new strategies, but we're also developing advanced technology to actually help people get to their goals faster. So let's expand on what you just said there with sequence. Sequence is critical in investing because, like you're saying, you can have the same transaction, but in the wrong order makes a big difference. So we're building technology that actually will help you to get to your goals much faster by using all these things we're talking about, the right sequence, the right matching of financing with assets, all of these things that can figure out these things so fast and get you to your goals in less than 10 years by using technology that does all the advanced calculations and all of these things that we're talking about that I've had over 20 years, 25 years, whatever it is, 30 years almost of experience putting into technology. And to me, seeing that, and we're seeing it today because as we're developing it, is incredible. And I think next year in 2026, that will be out in the market. And I'll tell you, I cannot wait to see people just open their eyes to what's possible. And this is all backed by numbers. This is all backed by math, and having something that tracks your financials and tells you what's off and what you should be focused on is incredible. And that's what I'm excited about. It's going to change the way people build wealth. So that's the big thing for me.
I'm going to take your word at this because you've never misled me. So if George says this is going to happen, people. It's going to change your world, 2026, and the tools that finance is developing. I can't wait to play with them because I know you geek out like I geek out on some of these tools. It's going to be fun. It's going to be great. George, I'm going to put you through a couple of questions here that I call Mansion or Mirage on this session. So obviously money mansion thing, but it's really going to be a, is it true or is it bogus kind of thing? I'm going to give a statement and you just give a quick answer. You don't have to explain if you don't want to, but here we go. Paying off your mortgage as fast as possible, mansion or Mirage?
That's Mirage. That's like the worst thing you can do. It depends on where you are in your journey. But when you're building wealth, that's the worst thing you can do. If you want to do it after, you get your goals, that's fine. Yeah.
Amazing. Ready for this one? Gold as an inflation hedge.
So gold is an inflation hedge. However, it doesn't necessarily build your wealth. It's just a hedge. In other words, you're maintaining your purchasing power, but you're not actually you're not increasing your purchasing power. So that's where things get interesting, because for most people building their wealth, they need to be increasing their purchasing power way more than just maintaining purchasing power, than inflation. So that's why I say you have to build your purchasing power faster in the beginning. So, so depending what you're trying to get to with that statement, gold is a hedge for inflation, but doesn't build your wealth necessarily. Your
All right, it's a bungalow. We're calling it a bungalow.
Bungalow.
Okay. All right. Dollar cost averaging into index ETFs, mansion or mirage? It is an asset.
Yeah, it's an asset. So here's the thing. So here's what I would say. It depends on the audience. So for most people, don't really want to put the effort. It's good. Okay, it's a good thing for them. But for true wealth builders, they need to be doing way more than that. So, bungalow, I guess, depends on.
Okay, that's okay. And there's no wrong answer. I'm not going to fact check this, or I might actually. I might send you an email with some results. And the last one, which should be an obvious one, mansion or mirage, you need money to make money.
The truth is, you don't. What you need is really understanding a strategy, building the right strategies. And here's what I would say. Yes, you need money, but it's not necessarily your money. That's the key part there. Okay. So that's why we're able to build our capital much faster, because you are using money, but it's just not your money. So it depends on who you're talking to, right? Some people might not understand that because they don't have the right training. But for the wealth builders, they see you need money. It's just not your money. You need it.
You wrote a book about this, actually. You wrote That
Exactly.
Millionaire, which is saying you don't need money to make money. But the program that we're talking about here, it uses your money to make money, and you kind of need that. But there is an in between, and George has the answer on both sides. Isn't that a wonderful? Like, I set you up there, buddy.
Yeah.
I set you up. George has offered to give away free program access if you go to finance.com/Donny Mangoes. That doesn't exist, people. I'm just kidding. That's not real. Okay. If somebody listening wants to start thinking like you do about wealth, what's the first mental shift you think that they need to make?
The first thing they need to do is understand that there is a hidden world. That's the first thing. And they need to start exploring what that could be like. What is that, right? And because as long as you're asking the question, what asset is going to get me to my goals, you are asking the wrong questions and you will never be able to find it. And here's why. Most investors, all they do is bounce from one asset to another asset to another asset, thinking this is the asset. And after 40 years, they're still searching and bouncing all over the place, going from one to another, thinking this is the next big thing. And there are thousands of assets out there. You just have to recognize that none of them are going to get you there on their own. You have to understand the finance first approach, which is what I'm referring to. So give yourself time in looking for the hidden world of finance, which is the game that the financial institutions, the bankers play. And that is the key part.
Thank you. George, this has been fantastic. I know my time is up. I know I'm on overtime with George Antone. Your time is valuable, but I appreciate you being here with me, and I know the audience appreciates your words of wisdom. If anybody's interested about learning more about finance, about George, here's your 15 seconds if you want to just tell them where to go and find you.
Thanks, Donny. So if you go to finance.com, FYNANC.com, just you'll find some resources there and hopefully have a free download, or they can go to Amazon and get one of my books. I would recommend to start with the Wealthy Code on Amazon and check it out. But either way, finance.com has a lot of resources too.
You're a legend. Buddy, I appreciate you as always. Thank you so very much for taking the time to enlighten us all and shine on us all, because you are a light, my friend.
Thanks for having me, Donny. It's always a pleasure talking to you and nerding out on these things.
Appreciate
Take care,
you.
man.